Imagine seeing the exact bars where big players quietly absorb sell pressure or unload into strength before the move everyone else chases. That's the edge behind smart money volume activity AlgoAlpha, an indicator that normalizes volume to the current regime and flags abnormal effort versus result, so you can spot accumulation, absorption, and distribution at real decision points. Instead of reacting to plain green or red volume bars, you're reacting to context. Load it on a clean chart and keep the view simple. The script builds a dynamic baseline of recent volume, then highlights activity zones when volume spikes beyond that baseline, or when huge effort produces tiny net price change classic absorption. Start with sensible defaults. Baseline lookback 50 to 100 bars. Sensitivity, Z-score, 2.0 to 2.5. Effort result at medium strictness, light smoothing. Optional session filter if you only trade London or New York overlap. And alerts set to once per bar close to avoid early flicker. Reading the signals is straightforward. Peaks with little progress equals absorption or churn. Peaks with strong follow-through equals expansion, efficient trend. Clusters of flagged bars around a level often mark accumulation or distribution. Combine those signals with your structure map, ILpac S or R zones, for more surgical entries and exits. A long example, price bases at support, you see back-to-back absorption signals, heavy volume, tiny candles, then a clean bullish close through the base, go long with stop under the absorption lows, first target at the next mapped resistance, with extra velocity likely if a thin volume pocket sits overhead. A short example, price squeezes into prior highs, prints a climax or exhaustion signal plus absorption wicks, then loses the level. Take the first confirmed bearish close with a stop just above the absorption highs and step targets down through nearby supports. Common mistakes? Treating any big volume bar as bullish, ignoring that big effort small result often means distribution, and placing take profits directly into a high volume wall. Instead, buy dips into absorbed support, fade pops into distribution only when structure and confirmation agree, and use the effort result labels to filter fake breakouts. For validation, codify these rules in the AlgoAlpha backtester. Apply realistic fees or slippage, then forward test with bar close alerts and journal spread, fills, and whether activity zones align with structure. And for deeper confluence, pair it with ILpac, momentum concepts, and the AlgoAlpha backtester to turn footprints into measurable edge. Thanks for watching AlgoAlpha, your edge in every market.